The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 394, Nasdaq's off 202, S&P's down 43, gold contract up $5.40, trading at $12.37 an ounce. You have silver up 7 cents, $14.70 an ounce. Light sweet crude down 40 cents, $66.93 a barrel. Notes and bonds, they caught a bid, they got wide price spread, they got volume behind the move. You get the 10-year note up 16 ticks, or 1/2 a point, 119.01. 30-year bond up 26 ticks, 139.17. King dollar down at 25 ticks, trading 96.430. The euro is at 113.62 to 1 US dollar. The yen is out here trading at 111.65 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Bottom line, look at that market, man.
We better be paying attention, man, because things just changed dramatically even since I did that 10 o'clock update, and it's only 10:07.
The market,
look at that bar, man.
Yep, you get a small ABC down. Well, you could have a large ABC down too. Bottom line, you get a larger. The futures are blowing through the low that was out here, folks. And when you take a look at this market, bottom line is that you get the volatility out here in spades. The market yesterday, you get a nice dead cat bounce happening. You get higher with volume, with light volume, and then at 4:01, Amazon as well as Google come out with numbers, and
yes.
that market just, the S&Ps went down 23 points in literally 2 minutes.
Yeah.
The Nasdaq futures went down 150 points. Bottom line is that they're selling everything, you know. So we'll take a look at some of the higher vol. Well, here, let's just start with the big dog, Amazon. So. Amazon, bottom line, missed on revenue.
Yes.
Expectations. So that's a big one. And you can see what's happening with Amazon now. It's coming into one of these high volume bars. Like when you look at Amazon and say, okay, that's where it wants to trade, which is 1638. Now, what's happening, folks, I got this on a weekly. And it looks like it's going to come in to this weekly bar with too much volume. So on a weekly, we get 40 million shares. The high of that bar is 1638. And we're at 32 right now, and it's 4.4. So Amazon's going to do a lot more than, what is that, 32? Yeah, it'll do more than 12 million shares today. Let me see what it did yesterday. Well, maybe not. We did 10 million yesterday. We'll see if we get 12 million. Yeah. 4 million on the open. That's pretty intense. Yeah. Google, we go take a look at Google out here. Google, the shocker in Google was pretty wild, that their advertising was flat year on year.
Okay. That
was like, whoa. And
must be getting some competition, right?
Listen to this. Amazon's quarter by quarter was up 153%. Now, they were a very small number. Sure. But the bottom line is that Amazon, I think, is eating some of Google's deal.
I would bet, yeah.
So it's a big number. You know, if we take a look at the SPY out here, you know, SPY's breaking lows. You're going to have juice behind this move. We're already at 27 million. And, you know, we go right back to this. It's this February 9th high volume low, folks. That's where this thing wants to go. And we keep getting closer and closer to it. That's 252. So it's 12 points from where we are. That seemed like a lot a couple days ago. Yes. But when the market is down 6 in about an hour, yes, the small caps are the ones that are getting really right next to it. It's, I think it's 142. Let me see, 142 something. Yeah, 142.50, and you know we hit 145.94 today. So bottom line is that you have a Friday and a bad week, you know, and people are buying the dip. And guess what? Thus far, it hasn't flown. If we go take a look at the bond market continues to say it wants higher price, lower yield. And it's coming through again. Now, this is a big one here, folks, and this is what it is. We just made it through the vicious downdraft from the 3rd of October. That's a big number, man. Yeah. You know, And we're going to have volume. We're already at 1.2 million contracts on the 10-year. So the 10-year will end up doing 2.5 million contracts or something. And that's saying the 10-year can go to 120.20. Let's see what we got that on. 3.07.
I know, quite a number when we were just sitting at basically 3 1/4, 3.23.
It's a big number, man.
Yeah.
You know, if this bond looks to me, well, technically, you know, you can make the case that it wants to go up to the high right now, and that would mean that the 10-year would come back under the 3%, which I think would be a total mind blower. You know, basically for folks.
Right.
Now the dollar, this is going to be a strange one, folks, and this is what it is. The dollar index has been testing its high. And the test has been with volume. It has had some volume coming into it. And you know, when you test the high and you actually have volume, it's not outstanding volume, but you know, it's not weak volume either. With like 25,000 contracts were coming into it, I believe. Okay. So yeah, 28,000 yesterday, 28,000 the day before. The number is 96,450, which is right where we're at right now.
Yes.
So it's going to be intriguing, man. If it can't make it on the daily and the weekly basis, it's like, okay, man, you know, the seller's back here again. Realistically, though, when I'm looking at that, when you're pushing with volume, most times you can take it out.
Sure.
And if you can't take it out, well, then guess what? You have a problem in paradise. Because the dollar has every chance to basically get up and over that level. You know, if we take a look at the NDX, isn't it amazing how fast the elevator down is?
Oh, for sure, man.
It really is, man. It's like...
Especially because we were down 600 points on Wednesday, right?
Yeah.
We're up, what, coming into the close? A decent amount.
Oh, yeah,
Big
yesterday.
numbers, huge.
Oh, yeah.
Right until 401 when they started dropping those earnings numbers. Yeah.
Right. I mean, it was that dramatic.
Yes.
You know, it was... What happens, folks, is that Google and Amazon, too, they always come out right, like split seconds after 4 o'clock.
Yes.
So it was like immediate, man. And then what happened there is that they took Netflix down and took Facebook down, which was an accelerator inside the NDX 100. That's what, you know, it wasn't just them. As soon as that came out, they were taking, Netflix was down 6 points immediately. Facebook wasn't that bad. Facebook was 1.5 points. You know, when we go take a look at some of these out here, you're talking serious business. You get Western Digital down 20%. Cerner is down 12.5%. Chart is down 9%. Seagate's down 9%. I mean, you're talking monster numbers here, man. This is like sick. Imagine waking up in the morning and you're down 20%.
No.
Seriously.
No.
I mean, that's. Oh, look at you get a gap away. So, ooh, baby, Western Digital. They're
a tough one, man.
They're definitely not selling any.
Tough 2018. Look at that roller coaster.
Cow. So yeah, this is going. Look at.
Oh, yeah, it's right there. 35.
Yeah. And we're at 43.
Yeah.
And the top of this, 46. And guess what, folks? It's coming in there with too much volume. You got 47 million there. We've already done 31. It'll 33, 32. Big numbers all across the board out here, no doubt about it. The gold, we need a bid in gold. The surprising thing is that gold is actually hanging with that dollar at highs.
Yes.
You know?
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now down 382. You get the Nasdaq off 210. S&Ps are off 43. Percentage-wise out here, what you have, folks, is that you get the Dow down 1.5%. Nasdaq is down 2.8. S&P's down 1.6. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So Dow Industrials right now down 375. You get the Nasdaq off 204. S&P's down 40. Let's go inside the good old Dow Industrials and see what the strength versus the weakness is out here. Well, look at that's interesting. There's only 2 stocks that are actually in the positive, Intel and Walgreens. So on the downside, you get Boeing putting 45 negative points. Home Depot 39, Apple 30, United Health 26, kind of even, you know, 30 to 40 points. Intel come out with good numbers. Bottom line is that, you know, you're up slightly, but nothing heavy, man. And they come out with really good numbers. And then they come out with a guidance going forward that they're going to beat it.
Okay. It's tough to be up on a day like today, right? Even
it
with
is.
Some numbers,
and that's really the point of that. When you get a real down market, you know, the bottom line is that tells you a lot that it can't catch a monster bid, you know, because, well, especially on a Friday. I mean, I wouldn't expect that you'd have any of these catch big bids, because what happens, folks, on a Friday, people got to think this thing through, and the aspect of, do I want to be long over the weekend?
Yes.
You know, what hasn't crept into the conversation, you know, man, Larry Pesavento was talking about it, is that this coming Monday is the anniversary of the '87 crash.
Okay.
Yeah. So, and as he was saying, I think it's Noam Linsky, who he has on quite a bit, he had done work on it, and there's no correlation. That you know, that, but I can tell you, I
mean on Monday we can't wait for the crash.
No, that's
okay,
right.
Maybe,
and I think anyone that was around at that time, you know, I remember that so well, man, because I had an office at 1 McKinley Square downtown, and Fidelity was literally right up the street, and people were going by. I was getting lunch, and people were like, they were all crowded there. I says, "What's going on?" Because I wasn't in the market at that point. You know what I mean? And then we were in the market, but not the stock market. And I looked as, oh my God! And you know, what's interesting about that, folks, is that the '87 crash, it was fast, furious, and you know, came back pretty fast too. But it affected the whole economy, but it took like 2 years.
Okay.
It's, you know, that was the reality. Do you know what
Yes.
I mean? You had the crash, and it took about a year and a half, then the economy went south for a while, you know.
So last night as well, Jason was in there with his subscribers, singing out, did a great workshop talking about quant strategies in up and down markets. So that's going to be available in about an hour on the subscribers page. People can sign up right now. And what made me really think about it is that you're talking, you know, volatility, man. He had some great information just in terms of he had a number of charts, and one of the cool things he was talking about too is like volatility can be like a lack of liquidity, right? So you're seeing the dry up of the funds, whether it's just the Fed in terms of putting the surplus.
Yeah.
And then he also had a lot of cool things. One thing that really jumped out, he was looking at the market capitalization of like all the companies, and then the volume of what's shares being traded in market capitalization, and it's tiny compared to how it used to be, as in there's not as much liquidity, and that can be an acceleration, as we're seeing, you know, when things really start to pick up and they cut off the spigots for free capital, man. There's just a lot of cool things he covered. So I encourage people, get over there, sign up for it. Of course, he puts out his weekly newsletter every Monday morning, and then he puts out updates throughout the week, a lot of them, but the big weekly newsletter Monday, and then that workshop will be up there by about noon today, so you'll have that over the weekend as well. It's about a 75-minute workshop. Great job by Jason in there last night. And then in the same way, we got our man Basil Chapman coming up Tuesday night. So he's going to be talking about the Chapman Wave tools that helped identify the market's last top and what to expect as we go into the new year.
The new year.
And Basil's going to have to be like doing homework every single day to get this thing on time, man. Where's the market going to be by the end of Tuesday night, right?
Seriously, man. Seriously.
So that'll be great. Basil's going to be in there with his subscribers for 90 minutes on Tuesday from 5 till 6:30. So I encourage people to check that out as well. And Basil's always sending out some good charts over the weekend. He just sent out his opening call this morning. So a lot of good action there, especially with what we're seeing going on in the market, man. Plenty to talk about.
Huge. And what happens, folks, when there's no liquidity, it's the bids that get pulled. So it's, you know, you get the bid and you get the offer. So what ends up happening is that, you know, there's plenty of funds, just like you're saying, that normally when you get pullbacks, they're sitting there saying, I want to buy, buy. And what ends up happening is that they're saying, no, I don't want to buy. So there's no bids. The bids are very small. Let's say the fund out there, normally they'd be bidding 10,000. Let's say Microsoft was down $4. Then all of a sudden they say, no, I'm not buying today. So all of a sudden on the other side of it, as people are selling, it accelerates on the way down. And what you have here, and this is, you know, I suspect it's going to take folks another 5, 6, 7 weeks. Someone's going to write up the thing. I should write it up, but I'm not going to. As the aspect of the amount of ETFs that we have right now in the marketplace, because that is an aspect of folks have so many ETFs, and it's the chicken and the egg.
Yes.
And this is exponential as to even from 2008. That's what's amazing.
Yeah.
Do you know what I mean? I don't know what the exact number is, but I suspect it's double or triple the amount of money that's in the ETF structure. So what happens on the way down is that, you know, you and me sell Amazon. Well, guess what? It's such a large weighting inside the NDX 100 that the State Street's got to sell the Qs to make a net asset value.
Yes.
And that, folks, is a monster. And it's like, okay, so when does that end? Well, when it ends when everything is exhausted, you know. So it's a big deal. There's no two ways about it. You know, let's go over to the IWM. So the IWM. Yeah, that's going right after it. See, I said, so we're going after 145.82. You've hit 94. You get 7 million shares. That's a big number right now in the IWM for 45 minutes into the marketplace.
Yeah.
Because the IWM puts a huge amount of volume in at the close, as does the GDX. You know, the GDX yesterday inside the gold market, that had a tough day. It pulled back with lighter volume, but it was still a tough day. Look, we went from 1993 to 1880. Now, you're going into a nice volume bar, and what you had happen out here yesterday is that you had Newmont go south. Look at that, baby. That went south in a big way. It's one of the largest weighting structures.
Yes.
You had Gold Corp. Gold Corp, if you're into Gold Corp, folks, you basically be really careful, because Goldcorp looks to me like it wants to go to 450. There's something wrong with this stock, man. If you get the gold report, you know, I was writing in there for quite some time about it, but what you have here, it looks like it's a monster ABC down. So it's like, man, oh, what happened to this? Like, look at this thing. I mean, that's a decisive break, man. Yeah. And if we bring this back, you're going to see you're under that. You're already into the bow that has 1070. Let's bring it back to 2002. 630 is the number there. But when you get into this a little, it looks to me like it's a small ABC down. So it's like, hey, that mine that we were in Mexico, they have problems with it, you know. 877-927-6648. We have the Dow Industrials right now trading down 320. Nasdaq is off 192. S&P's off 35. We'll come right back.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 380. You get the Nasdaq off 209. S&Ps are off 40. And this is an intriguing story. So Larry Ellison, who basically started Oracle,
Yes. multi-billionaire.
Oh yeah,
right? He's up there in the
big
top.
time.
Yeah.
And you know, in the tech business, he is like not only just well respected. He was one of the first guys. He was almost like a Steve Jobs out there, and is still there.
Sure.
So he yesterday was at an analyst. I think this was his own. Let's see. Ellison went off script during an analyst meeting late Thursday to bring up the electric car maker and its billionaire chief executive. He said Tesla is the second largest investment. Tesla had a good day. Now he's good friends with Elon Musk also. But the bottom line is that, you know, that's going to keep Tesla, you know, basically, I'd say up there, because this guy's respected, man, and he knows what he's doing.
Sure.
You know what I mean? It's,
right.
You know.
Yeah, and there it is, 51 billion. In terms of his wealth.
He has 51 billion.
Yeah, I knew. I mean, he's the top 5, top 10 wealthiest guys in the world.
Right.
From his stake in Oracle.
Yeah, and watch, he's never sold it. I mean,
Yeah.
he might have sold some of it, but this was over the course of years. It's
I
like.
think you're in Tesla still. You're gonna have to jump over to. Yeah.
ORCL.
One more time.
ORCL.
There he is.
Oh, there he is. Yeah, 29.87%.
Yeah.
Look at that position.
It is. I know.
Is that one?
That's 1 billion shares. 1.1 billion shares.
Yeah, 1.1 billion shares.
Of a company trading at $47. And just he owns 30% of the company, and the company is worth $180 billion. Not bad.
Wow.
Yeah.
That's intense.
For a CEO to keep 30% of their company is pretty remarkable.
It is.
You know, and for a company of that size, when you start being, you know, an S&P 100 type company.
Right. Oh my God. I mean, it's unbelievable, actually. Pretty wild.
Yeah.
And there's so many companies that got spun off of him. You know.
Okay.
The Salesforce. That guy was with him.
Okay.
Who's the other guy that's? There's another guy that competes with SAP. And that's what, you know, when you really see someone that has started with like a Oracle, and how many people have worked there, come out, and then spun off monster companies too.
Sure.
That's impressive, man. I mean,
yeah. I mean, similar stuff has happened with like Google, right? And,
oh yeah,
and, you know,
absolutely.
You guys leaving
right.
sort of YouTube, but in the same way, you know, you
right.
just have really those startups, and they become behemoths in their own right. But you see the type of human capital that they had at the beginning,
Huge.
And all of those guys realize that there's more opportunities than just working for that company in terms of where they can go, and then they get it done.
And they're so intertwined with the tech business in general.
Yes.
You know what I mean? That's pretty cool. Let's go take a look at Apple, see what's going on with Apple. So, you know, what did happen last night, folks, is that as soon as Google, Apple's not, it's on there $4, it's not getting killed. But as soon as Google and Amazon did come out with those numbers, it stopped. Well, let's see what happened with Netflix, because Netflix was down $6 right off the bat. Yeah, so Netflix got hit pretty quick. This was up, like, so watch, you can see it yesterday. We were up at 319, and, you know, as soon as those numbers come out, man, it didn't take it all away, but it took half of it away. Yeah. And now what you're going to have, oh, look at this. This is a problem. So now what you're doing, that's a weekly. So it's breaking its swings with volume now. You're already at 68 million. That swing had 63. So now, let's see. It's not an ABC down, because that looks like more than a 0.618 retracement. Let me get that closer. Okay, so I think it is. Let's see. What we're looking for, folks, I want to see what kind of retracement this was from when it just did that. It just did it, huh? Yeah, it just did. So it's going to be a close call. You know, because what we did here is that it just went to a 0.618. Now, when you go over a 0.618, it's not an ABC down, but that's about as close as you can get. So we'll see where it shakes out, but it doesn't look like this selling wants to stop. Now, what's going to get intriguing is that the selling definitely didn't stop overseas. If we go to the Nikkei, you take a look at the Nikkei. Nikkei last night, you know, we're 21,184. And this just looks like, you know, that swing low out there in March is 20,347. Those numbers seem so big. Now, look what the Nikkei did in 1 week thus far. Yeah. What's that, 2,000 points? Yeah.
Almost, like 1,700.
So,
Yeah.
Amazing.
And that's coming off where 2,200 would have been 10%. So you're talking about, 6, 7, 8%, somewhere in that ballpark. And yeah.
And so if we take a look at the, so when you take a look at these indices year to date, right now, if we close where we are, you get the Dow down 1.3%, you get the S&P's down 1.7%, and the NASDAQ is up 2%.
NASDAQ only green on that screen in terms of on a yearly basis.
Look at Europe, man. Yeah,
yes.
These numbers in Europe, folks, okay, these just kind of snuck up on me. I mean,
year to date, big numbers, right?
Yeah, you get the DAX in Germany down 19%. You get the FTSE in the UK down 15.5%. France is down 13%. And then, oh my God, look, if we go to Asia, this is a whole different, oh my God, this is a whole different animal. So you get the Nikkei, that's the strongest one. It's down 6.9%. Taipei, Taiwan is down 12%. You got the Hang Seng down 18%. Shanghai, that's intense, 27%.
Yeah.
Big numbers. Holy cow. So.
And we'll see. NASDAQ's only got 2%, man. It's down 3% today. So,
right.
So there's not quite a buffer there.
No, there isn't. And if we take a look at this, where we are, you're breaking lows. So looks like just as we're speaking right now, we're breaking them. So 70.98. Yeah, we're right at them. 70.98 was the low of Wednesday.
Yes.
And if we bring this back, okay. So here's this is a big problem. So the composite now is 177 points into the high volume bar from the 9th. And you know what blows my mind, man? The NDX 100, folks, and the NASDAQ composite in general, it is amazing to me how fast it can go down. And I mean, I've been doing this forever, but it just blows my mind. I mean, think about it. When we were up here, I mean, I've said this on the air. I was like, wow, this got to be a long way to get down there. I mean, it's like, how do you go from 81.33?
Sure.
Right. Well, let's say, that's 81.07.
Yes.
And
that was October 5th.
Yeah.
The week of, but yeah.
And it just that's what the NASDAQ does.
Yes. No.
You know.
Crazy moves.
It is. It's all great until it isn't inside the NASDAQ, and that's how, I guess that's why the growth stocks are the growth stocks, and that's why they're penalizing Amazon so dramatically, Yeah. And Amazon, we'll talk about Amazon when we get back, folks, because Amazon is always so hard to buy on a pullback, and I'll show you, Amazon does vicious pullbacks when it's happening. It's like, oh, I can't buy this. Because I haven't been able to buy it yet. Yeah. Stay right there, folks. Tommy and I are coming right back. Dow's down 400. NASDAQ is off 223. S&P's off 46.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrial's down 423. Nasdaq is off 228. S&P's down 46. We're catching a bid in gold. Gold's up by 640. You get silver up 8 cents. And King Dollar. King Dollar looks like it's going to give it up. So this is going to be pretty wild. If, in fact, that is what we have happening here. Let me just see if we get a seller here. Well, you do. You know, not a monster one, but bottom line is that it looks like we're going to basically fail on price coming at this number. You know what's going to be really wild, too, is that, you know, you had a little doji at the highs of 2015, and it's a shooting star, and they love to get retested. And it's going to be really weird if we close like here, because that's another shooting star.
Sorry, did you say 2015 or August? Where? That's
Right.
last. Okay. That's 2018, right? That's just August. Do it.
Yeah,
Okay. I thought you said. Okay. Yeah, just that high in August for sure.
If we take a look at the continuous contract out here, what you're going to see is that we've been up here for so long. So this is June of 2018. Now the continuous contract, 96,865. Yeah, we haven't hit it, but I don't think that makes any difference. So they just tie these together. But it looks like what we have here is that the supply line, like when we take a look at this, the supply line is actually from February of 2015 going over to November of 2016.
Yeah.
You know, and that's, you know, what's unusual here is that because we came down so quick from December of 2016, you know, down to that low in February, you know, that could have made a shot, but guess what? This over here is what is basically slowing that baby down. But that's you know, it makes sense when we start putting this together, meaning, you know, where do folks want to put money. And if you haven't test-driven the gold report, folks, great time to do it. Come on over. Bottom line, even if you have test-driven the gold report, because we have a new website.
Yeah.
So it doesn't matter, meaning that on the old website, folks, you can only do it once. That's how it was set up. But because we have a whole new database and everything, the bottom line is that the computer doesn't know the difference. So
Yeah, so you're talking about the money-back guarantee to bring people in.
right,
Yeah,
exactly.
So people can get in there, get a 30-day money-back guarantee, sign up for the gold report, and of course you put out that weekly issue Monday morning. So it's a good time to sign up for a multitude of those newsletters right now.
Look at that. S&P falls 10% from its all-time high.
Yeah, I'll click on it, but there's not much more. Oh, I missed it. That's okay. I was going to say there's not much more they're going to say. I figured it was just going to be that one headline. That's all they're going to say.
That's the first get-go.
Yeah.
This is going to be a long day out here, folks, because what you have is that so two different things end up happening with the bounce like yesterday. The aspect, what has happened is that the retail traders, according to the Bank of America and Schwab, have been continually buying this and putting monster money in, billions. And guess what? When we got that bounce yesterday, I'm sure more money went in, and then all of it got dragged out ASAP. And that's always really dangerous when it happens immediately. The professional traders, even the professional retail traders, will get out. Unfortunately, the folks for a longer period of time, you know, you hear they think they're getting a good deal. And, you know, it is what it is. And we'll see what type of a deal that comes in, you know, because we're getting closer. And let me see the IWM. And what we're going to be able to glean, folks, out of the IWM is that is the February 9th swing low going to hold? Because it hasn't held inside the financials. And that is a big number, man, you know, because when you know, fundamentally, when you look at it, the financials, let me put this closer for us, so I'll just go. You can see that number in the financials was $26.76.
Yes.
And we're way below it. So, you know, it's like the financials are going for this 2447, this volume there. If we break that, then it wants to go all the way back to the breakout. And the breakout, that's November of 2016.
Backing up 2 years just like that.
I'm telling you, man, if you're a money manager, this got to be a tough place to be in. If you haven't got out yet, you know, you're up, everyone was up good.
Yeah.
It's like, okay, what do? You know?
Yes.
Do you buy more? Or do you get out? And, you know, there you're dealing with, we probably, I don't know if it's 58 days left, 55 trading days left. There's not a lot.
Yeah.
You know?
No, right.
Ooh, sorry. Excuse me, folks. Let's go take a look at some of the, because there was a slew of earnings out here yesterday.
Yeah. What did Kevin Hinks tell us? 337 stocks reporting just yesterday alone.
Huge, I know. And you can see out of the high volume equities, the only one that is positive is Intel.
Yeah.
Intel's up 98 cents. So, oh, let's go to Snap. Snap, oh my God.
Snapping lower every day.
Snap, folks, is in big trouble.
Yeah.
Okay, so you're down $1.16. Look at this. It's an ABC down. Okay, so we'll check it out. Your A point is 942. Your B is 6. Okay, so $3. That gives you 446. A to B equals C to D, 446. It's going to blow away the B point today. It only needs, the B point had 31.1 million shares. We've already done 29.9 million shares.
Yeah.
Can you imagine?
Oh, it's quite a number, man. Can we go into their news for what they actually did they report? Is that what I'm?
Yes, they did. Yeah. And
they did not report well.
No, they didn't.
No.
Is it? Tell me when to stop.
Yeah, I'm not sure.
Okay.
I think maybe even keep going. We're back to.
That was yesterday.
There we go.
There we go.
Yeah, so
users were down.
Yeah, users are important for sure, right? So the users is down 1% versus second quarter, which is not good, man. Losing users when they're already struggling. So third quarter revenue, though, did come in 297 versus 283. Losses only 12 versus estimate of 14. And then you see fourth quarter guidance, not bad. The estimate was 372, maybe in a little bit of a lower range, and from 355 to 380. But I'd say that that's the number that's sticking out in terms of not even able to grow their user base. It's like, so they can't grow their user base.
And they're losing money.
Yeah, and it's like, and they're struggling to monetize that user base already. Jason was talking in his workshop as well about Snap, about Twitter, and just part of it.
Yeah.
And you know, he said at one point, I challenge anybody to tell me if they've ever clicked on an ad on Twitter. But it's a similar deal on Snapchat.
Oh, for sure.
And I just kind of chuckle because I agree, you know, and we all see, you know, tweets from different people, you know, in terms of Twitter being prevalent in society.
Right.
But it doesn't matter if you can't monetize it.
Exactly.
Yeah, that's it. So, you know, they have a different platform. It's not like a Facebook deal that you can really monetize. They're going
to start charging the users, you know, 10 cents a tweet.
Boy. Yeah, no, who knows? Who knows?
Oh, did you see Fox? Fox, so what Fox is doing, folks, okay? Fox is...
You sent me that article,
Fox is starting a Fox Nation. They're going to start charging people
Yeah,
$5 or $6
a month, right?
Yeah. For the
or you can
Fox.
sign up for like $60 bucks a year or something like that
Yeah.
for more online content, original content, trying to turn that Fox viewer base into more revenue.
More screen.
Yeah.
Yep. Stay right there, folks. Tommy and I are coming right back. We have the Dow right now down 450. Nasdaq's off 228. S&Ps are off 50. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And gold's catching a bid, folks. So if we take a look at this, and I suspect what you have here, this, let's see. So right now, yeah, you just catch a small bid. We're up $8, and it looks like, so you got Mulvaney also just come out. This is what's going on. Mick Mulvaney, which is our budget director.
Yes.
He just come out, and let's see. U.S. growth last quarter beaten estimates and inflation contained. White House budget director Mick Mulvaney says the latest figures probably takes pressure off the Fed to raise rates as they've indicated they want to.
Coming at that Fed from all sides.
Coming at the Fed, baby. The bottom line is that, you know, and that's when the dollar's giving it up, and that's what is going on. And you can expect to see more of that, which is going to be pretty wild. But that's, you know, that's a reality.
That's the reality we live in.
That's the reality we live in. And guess what? That looks like that dollar will fail. And the control, this is where the real control is, folks. The control is in the Treasury. bottom line is that it's not so much, you know, the budget director, but Trump can fucking, he can, you know, say to the Treasury, hey man, start selling those dollars, you know. So we'll see what happens. Market-wise out here, you know, percentage-wise, we get with NASDAQ 3.2% down the NASDAQ. S&P's 2.3.
After you get through here, can we go to the VIX? Because, man, my head is right. I mean, it's amazing, right? And the last 3 days, NASDAQ,
26
3 to 4%, the NASDAQ is swinging.
Look at that.
On a daily basis.
Yeah.
Yeah, and even that seems a little bit low with how the last 3 days have gone.
It does.
Yeah.
Stay right there, folks. We got a fast market coming up with Kevin Hinks, Tom White, then I'm Mr. Basil Chapman. Steve's off today. Dave will be back, and I'll be back. Thanks, pal.
Thanks, man.
Well, go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.